I'm Yahoo Finance Executive Editor Brian Sozzi. You're taking a look at a live shot of the opening bells on Wall Street on this Monday morning. Southside Bank shares ringing the bell at the New York Stock Exchange to celebrate their 65th anniversary. Stockyards Bancorp getting things underway over at the NASDAQ. Now, the trade deals are flowing. President Trump has landed a trade deal with the European Union that will see 15% tariffs applied to EU imports. The 15% tariff rate is looking like it will be the baseline for most large countries. Speaking of large countries, all eyes now turn to whether Trump can secure a trade deal with China. Two countries are reportedly aiming to extend their tariff truce by 90 days from the August 12th deadline. While investors digest this barrage of news, they're also on high alert for this week's Fed meeting, jobs report, and big earnings from P&G, Microsoft, Meta, and Apple. And you thought it would be a slow summer. Think again. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money you have made in your portfolio this year, because it has been a bull market. Let's head down to the NASDAQ in Times Square and check in with Yahoo Finance senior reporter Brooke DePalma. Brooke.
Good morning, Brian. Certainly not a slow summer here as we make way into this weekend. Investors really digest those big tech earnings, the FOMC meeting, which is likely expected to hold interest rates steady, and markets really pricing that in right now. If you take a closer look at all three major indices, we have the Dow Jones opening flat, the NASDAQ moving slightly higher, as once again we expect Meta, Amazon, Apple, and Microsoft all to report those key earnings. Those four companies, worth noting, make up more than $11 trillion of these markets. Also, S&P 500 moving just a tick higher, up roughly 0.2%. I want to take a closer look as well at that NASDAQ, and we take a look at those big tech earnings which are set to go out. We currently have Microsoft flat, Apple flat as well, Amazon moving slightly higher, up more than 1%, and Meta, quite the run this year this company has had. If you take a closer look year to date, what we've seen, or rather over the past 6 months here, what we've seen is this company certainly move higher, up nearly 7% over the past 6 months, and year to date up more than 23%, as investors really get excited about Meta really leaning into AI. And what we know is that as these companies are set to report their earnings, as investors really digest, what we've seen is investors also willing to take on some risk here. Year to date, we see Bitcoin rising up more than 25%, Ethereum rising up more than 14%. But really over the past month, we've seen investors move to more of these risk-on assets. This crypto rally, not only, buy Bitcoin, but rather investors really looking to alternative investments around that crypto rally, with Ethereum up 30% year to date. And another space that I want to take a closer look at is meme stocks. Over this past week, we've seen this return to meme stock. We've seen Open Door really have this similar narrative around Carvana, where companies think that this is, or rather retail investors think this could be a turnaround story. But in addition to that, take a look at Kohl's, take a look at Krispy Kreme, American Eagle. These are other companies that have seen this surge over the past 5 days, as these retail investors are willing to take on more risk in this environment where the S&P 500 and the NASDAQ have seen these record highs, and they're looking for other places to get into this market, other places that perhaps are lower cost investments where they think they could have bigger turns here. Back to you, Brian.
Brooke, I don't think I bought a pair of jeans in American Eagles 20 years ago. I mean, I went and picked up some ripped jeans with paint on them. Remember those were cool? I'm probably too old.
Cindy Sweeney getting lots of attention around American Eagle.
All right, fair enough. Thanks, Brooke. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, art of the deal. President Trump secures his next key trade deal in the European Union. This comes on the heels of deals with Japan and Vietnam. Some of the early winners being talked about from the EU deal include automakers like Mercedes-Benz, chip player ASML, and airplane maker Boeing. Number two, all in on AI. Tesla has tapped Samsung to manufacture its next generation AI 6 chip. The multi-year deal is worth $16.5 billion for Samsung. CEO Elon Musk is clearly sending a statement here to investors that its future will be all about driverless cars and robots, even if that means more short-term profit pain. Number three, will he do the president's bidding? Fed Chair Jerome Powell gears up for arguably his most important Fed meeting in his tenure as chair. President Trump continues to demand interest rate cuts, with more pressure from the administration applied over the weekend from the likes of Commerce Secretary Howard Lutnick. The Fed is likely to stand pat on interest rates this week, despite the pressure tactics from the White House, and that could ratchet up the headline risk of stocks in the aftermath. Let's fire up my roundtable for today. Crossmark Global Investments Chief Market Strategist Victoria Fernandez and Yahoo Finance senior reporters Brooke De Palma and Inez Ferre. Victoria, over to you. Always nice to see you. Off the jump, this EU trade deal now has many folks on the street raising their S&P 500 price targets to over 7,000 in some cases. Are you in that camp?
No, we're not in that camp, Brian, because we still think there's a lot of uncertainty that has to be dealt with. We see these headlines over and over again, and then things happen and they change, or there's new elements brought into it. And so until we are certain as to what things look like moving forward, I don't think you can change your outlook completely based on the headline that we have here today. What I do think it does, however, is it does bring some of the level of the uncertainty down in terms of, are we going to get anything at all? Are tariffs going to be 30, 40, 50%? Are we going to look at having something more around that 12 to 20%? And it looks like the latter is what we're going to have, and that should give a little bit of breathing room to the market and should continue to be a tailwind going forward. But I'm not sure we're ready to raise a target all the way up to 7,000 when there's still a lot of other uncertainties, especially the labor market that we're looking at.
I'm glad you mentioned uncertainty, Victoria. I just had on the Opening Bid Unfiltered podcast this morning, Apollo's chief economist Torsten Slok. Take a listen to what he said about the direction of the economy.
It makes sense to worry about the trade war. It makes sense to worry about immigration restrictions, deportations. It makes sense to worry about student loan payments. But overall, this is more like a Nike swoosh, not a recession, but a Nike swoosh where we have a slowdown over the next several quarters and then we start to recover again. But there are some headwinds now that we do need to take seriously. And some people put a lot more weight on them than I do and say that the risk of a recession therefore is higher. But I think the recession probability, to your question, Brian, has come down and is lower today than where it was just a few months ago.
So, Victoria, we are in the Nike swoosh economy, I guess.
Well, I do agree that I think recession odds have come down pretty significantly from earlier in this year. And I do agree also that I think we're going to have a slowdown. Take tariffs out of the equation and let's look at earnings. Earnings are doing a little bit better than expected, but we're still, 6.5% EPS growth. That's the slowest growth we've had in about a year and a half, close to 24 months. So there is some slowing there. I think you're seeing the consumer, again, not going off the cliff, but slowing down. Housing is not doing well. So that's another headwind we're looking at. And I think we need to look at all of the government layoffs that we had through the DOGE component. Those are going to be really hitting in September and October to the numbers that we're looking at in regards to labor reports. Obviously, this week is huge with labor numbers, right? We've got JOLTS, ADP, weekly jobless claims, the non-farm payrolls, lots of data there. But I think it's going to be September and October that maybe shows a pullback there that will cause consumers to start to lag a little bit. So, yes, I would expect a slowdown from now as we go through the end of this year and into next year. But I don't disagree that there are some strong headwinds, especially when you look at things out of the reconciliation bill that could be tailwinds in 2026.
And as make sense of this, so far today, automakers, EU automakers are being perceived as winners, Mercedes-Benz. But if you really think about it, the cost of their cars in the U.S. are likely to go up. So how good a news is this trade deal for a company like that?
Well, and we know that automakers have talked about tariffs and how these will impact their bottom line. We know that here in the U.S., GM has talked about the impact of tariffs. So there is uncertainty with respect to how tariffs will ultimately play out. I mean, you have this EU-U.S. deal that is better than feared, certainly at 15%. But nonetheless, it will impact companies like the automakers. And then you have to ask yourself, how will this impact other companies that face consumers? So we will be hearing from Apple. What will Apple be saying about tariffs? What will Amazon be saying about tariffs? What will, in August, Walmart be saying about tariffs? So I think what Victoria was getting to was the point about what consumers and, these companies have been sort of reluctant to talk about how they're going to pass down the tariffs to consumers or where they'll absorb some. So what we need to see is how much will companies be absorbing and how much will the consumer have to absorb.
I'm good as long as the iPhone doesn't go to $5,000 like Wedbush's Dan Ives suggested a few months ago. I can't deal with a $5,000 iPhone. But Brooke, Nez mentioned Walmart. eyes now turn to a potential trade deal with China, which looks to be there will be tariffs in place. If we're learning anything from these early trade deals, what does it mean to a company like Walmart, and what does it mean to Walmart's investors?
Yeah, well, certainly what we heard from Walmart back in April that really spooked investors is this idea that prices are going to increase. And then, of course, we heard that pushback from President Trump to Walmart when they had announced that those prices were going to increase. But what we've heard from all these major retailers, take Levi's, which, of course, is a apparel company and not necessarily just a retailer, but at large, what we've heard is this mitigation tactics essentially, quote unquote, work. Here, these companies able to move around some of their supply chains, these companies able to work with vendors to negotiate how much exactly they're willing to take on, how much the company itself, like a Walmart, is willing to take on, and then ultimately at the end of the day, how much exactly then the consumer is going to get hit with. And when we think about not only Walmart, but also Target, also set to report in mid-August, all eyes will be how exactly these retailers, especially after we heard from a company like Levi's, ultimately come out on top of these tariffs. What exactly we'll hear from those companies will be crucial, exactly how investors digest, how big box retailers were able to offset. But we're likely to hear things similar to what we've heard over the past week, especially from Coca-Cola. We also heard from PepsiCo that the low-income consumer still remains under pressure, but ultimately the consumer has remained resilient within this environment of so much uncertainty, and many analysts saying that we expect Walmart, other retailers to tout the same thing. The consumer is still doing well.
Inez, tell me I'm wrong on this one. This $16.5 billion deal between Tesla and Samsung, to me, it's Elon saying this whole world is all going to be about robots, driverless cars, and humans are going to play a back seat. But this is a very big bet to be making by Elon. And some will say, don't bet against Elon. But why not bet against Elon? Who is to say that robots, we will need robots in our lives?
Yeah, and look, and this is what he was also talking about in the earnings call, was about autonomous and robots. And you can clearly see that this is the vision that he is looking at in the future for where the company is going. It's almost as though the EV, the past Tesla that we've known of the EV maker is something of the past, because now we are looking at these robot taxis and also at endless amounts of robots. And you also heard Elon Musk talking about Tesla, that it could become the most valuable company in the world. He also talked about in a social media post about the possibility of a $20 trillion valuation for Tesla, which right? I mean, when you think about it, and you're thinking about like Nvidia at $4 trillion, and then you think Tesla at $20 trillion. But look, what he's basically envisioning is robots being able to do everything and anything. And this is the idea that some have, that you are going to have an endless amount of workers, an endless amount of robots that can produce an endless amount of activities. So this is going to change the world as we know it, if indeed it does play out this way. It'll be interesting to see how humans fit into all of this and human work fits into all of this. But the idea is that you have infinite workers, infinite robots doing everyday tasks.
Victoria, you see a pathway to $20 trillion for a Tesla valuation, right?
I mean, they could get there based on some of the things that we're looking at if these things come to fruition. Obviously, I'm a little concerned around everything going to robots. I guess I show my age when I say I would love to have like a Rosie from the Jetsons, right? If she can cook me dinner and do my laundry,
Elon's going to bring it to you, Victoria. Hang in there.
Yeah, but it'll be interesting to see what happens with workers, as Inez was saying. If they get replaced by robots for so many jobs, what are the jobs that they can then go to? It concerns me around there.
Good chat, y'all. All right, straight ahead. Why this European chip maker is bouncing back after a rough earnings week just 1 week ago. And we have our stock of the day, your clue. Company makes video games. Welcome back to Opening Bid. Semiconductor play ASML getting a lot of mentions on the street this morning as a winner from the U.S. trade deal with the EU. Stock is also trading higher. I would note ASML just a week ago issued weak guidance that hammered the stock, so we'll be mindful of that, said the JP Morgan team this morning. Quote, if this information from the U.S. on zero tariffs on semiconductor equipment is correct, This would be very positive for ASML in particular. All right, Microsoft has had a hot run into its Wednesday evening earnings report, up a scorching 31% in the past 3 months. Now the tech giant has to deliver big on that earnings report, and that's why I'm focusing here on our stock of the day on this one. Here's what I'm watching in the numbers. One, Azure sales. With ServiceNow and Google Cloud thumping sales estimates last week, it's rather apparent corporations are still spending strongly on cloud products. Azure sales have to easily beat estimates for the Microsoft bulls to be satisfied. Number two, capital expenditure spending. Alphabet lifted its full-year CapEx spending plans by $10 billion last week. Some of the street are warning Microsoft could hike its CapEx plans by 25% to 50% in its new fiscal year versus the one it will have just completed. It may be hard to justify that increase. Now, Microsoft's valuation leaves no room for disappointment. Hop onto the Yahoo Finance platform, and you can see the stock trades on double-digit price to sales, price to book, and enterprise value to revenue ratios on a trailing basis. Still with me, my roundtable, Victoria Fernandez, Brooke De Palma, and Inez Ferre. Victoria, Microsoft clearly, obviously, has a great business model. They've been doing very well for many years. They will likely do very well when they report later this week. But is good going to be good enough as it pertains to the stock price?
I don't think it is, Brian. I mean, we look at the tech companies that we've seen report already. They can beat on the top and the bottom line. Guidance can be solid, and it's just not enough for this market. They're really going to have to hit the cover off the ball, I think, to see the stock price continue to move. Now, analysts pricing it do have about a 12% upside to this stock going forward, and they're expected to have revenue growth of around 14%. So that's really solid numbers. But it comes down to the two elements that I think you already mentioned. We saw a clear acceleration when it came to cloud growth from Google. So there's going to be an expectation that we need to see this from Azure, for Microsoft, and same for Amazon with AWS. So we've got to see that growth in the cloud component, and there's going to be a lot around the CapEx. We want to see CapEx in this economy. It's good for productivity. It's good for GDP growth. But like you said, there has to be a justification for increasing it too much. So obviously people are going to be watching that. I think you can see the stock move a little bit higher if they really report well and they increase that guidance significantly, but it's going to take a lot to move the stock more than it's already moved.
And as if Microsoft comes out here and says we're lifting our CapEx guidance by 50% year over year, that's going to be yes, your face says it all, Inez. Yes, it does. That would be a big number for, I think, the market to digest on an earnings evening.
Yeah, I mean, the market has been very patient with these big tech players with respect to their CapEx, to their ballooning CapEx over the years. And so perhaps they will want to see Microsoft start talking about the payoffs of AI and how this is paying off with Copilot, with different programs. So this is what I believe Wall Street will be wanting to hear, similar to what we heard with Alphabet, that the spending in AI is indeed starting to show at least some signs of paying off.
Brooke, I talked to ServiceNow CEO Bill McDermott last week. I mean, he was kept pretty simple on what he is seeing in his business. He said, quote, "We're rocking." So I saw it in the numbers. Enterprise spending is still likely to be strong. So it's also hard to suggest that Microsoft is going to disappoint across the board when it reports.
Yes, certainly. There's lots of momentum behind this trade, especially when it comes to Microsoft. We're seeing Microsoft stock up roughly 22% year to date, but we're also seeing Amazon slightly higher, up 6%, Meta up nearly 24%, and Apple trailing behind, down nearly 15%. When you think about these four companies that are set to report their earnings this week, the momentum around AI, as Inez had noted, is crucial here. We've seen Apple fall behind, and we've seen analysts call for Apple to really get on this AI arms race, really perhaps with an acquisition, with some sort of investment in another company. And we've seen Microsoft ultimately get rewarded. Of course, one analyst saying from B of A is that the next catalyst could be that Microsoft Copilot. They said that it could be becoming more material to growth. That's something to look out for. And Dan Ives, someone I listen to as well, read his notes all the time, he said that we believe Microsoft is just hitting its next phase of monetization monetization on the AI front. But when you think about the way that these big tech companies have really contributed to the recent rallies that we've seen around the NASDAQ, the S&P 500, these four companies, Microsoft, Meta, Amazon, and Apple, combined make up an $11 trillion market cap. And so it's crucial for these companies to do well in order for us to continue to see these all-time highs.
Victoria, real quick, is there a sleeper name in tech that you like right now outside of the Mag 7?
Well, one of the names that we like, and actually it got downgraded today, so it might be a good opportunity to get in, is Cisco. And I know that's kind of looking old school, but you're looking at a tech name that provides you a dividend and is moving more from just the hardware component that they have to some of the software components. So they have that recurring revenue coming in. And so I think if you want to spread your wings outside of the Mag 7, you can look at a name like Cisco in the tech industry that gives you a little bit of a different element to tech.
A real company making real stuff, and I think that sets us up for our question of the day. It is time now for our question of the day, which is based on this interesting chart from the folks over at Jefferies. Jefferies noting that trading in stocks under $5 has risen to 26% of whole volume so far this year. That's a huge number. My question in the roundtable is this: why is this activity in speculative stocks happening? Brooke, let me set this up with you, because you talked about the meme stock trade earlier on in the show. What is it looking like today? Because I know a lot of the names that did well early last week sold off into the weekend.
Yeah, if we take a look at the YF Interactive over the past 5 days, if you take a look at the equal weight, we've seen Krispy Kreme really come into play here over the past 5 days alone. That stock's up more than 26% rather. Macy's also getting a bit of a buzz here. That stock up more than 9%. And what we really know here is, what I'm hearing from my sources, is that as we reach these record highs, ultimately, retail investors are looking for other ways to get in on the market here, and that's contributed to recent gains from American Eagle. Once they announced that Sydney Sweeney campaign, retail investors thinking that there's a potential growth story there. They're looking to get in on American Eagle. In addition to that, we've seen Kohl's, a company that has really struggled over the past year, especially as they search for a new CEO there. These companies that really have not been performing well, a Kohl's, a Krispy Kreme, Macy's has been underperforming, and American Eagle, they're getting this recent buzz from retail investors who think potentially there could be a growth story there. Open Door and Carvana also getting attention there. Open Door thinking that, investors around there thinking this could be another turnaround story like we saw with Carvana as well.
We had a great chat with Tasty Trades, Tom Sosnoff. Take a listen to what he said on this meme stock mania.
But this is also a time of year where there's no real sports to bet on, because it's really just baseball. So, what better place to gamble than a zero commission, zero fees, in and out of all these little penny stocks for basically no money.
Victoria, is that what we're looking at here? There's really no sports to bet on, and people want to try to pick a winner that's priced at $2 a share?
Well, it's an interesting perspective. I mean, I do have to say go Stros since it's baseball season, but it could be an element that people are looking for of ways to play this. And you look at these stocks, they're mostly like these shorted stocks. So these are more day traders that are going in. These are not your long-term investors that are going and trying to build their portfolio. They are quick trades that are being done. They're small dollar amounts. They're highly shorted stocks. So there's a lot of volatility around them. So maybe it is a little bit of the gambler's addiction, if you want to put that phrase there, of people looking for ways to play the market on a quick basis. But this is definitely not a long-term investment strategy that we would want people to invest in.
And as I'm of the mindset that this type of activity is a sign of froth in the broader stock market.
It certainly is, and Wall Street has been certainly talking about this. Goldman Sachs has talked about the fact that you are seeing speculative trading on the rise with their speculative trading index that they have, and call options have been surging. You have the volatility index that's sitting at around 15, so that means that there's really no fear in the market right now. You've got Bitcoin that's been surging, equities surging, these meme stocks that have been surging, so this indicates a strong risk on sentiment, but Wall Street warns time and again that when you see this type of scenario, this is ripe for some type of pullback. So we look overbought in a lot of categories, and Wall Street's warning, hang on, because this is when you may see a pullback.
Victoria, great to see you as always, but as a Yankees fan, I can't support your Houston Astros bullishness. But I get where you're coming from, though. I appreciate it. A big thank you to my roundtable, Victoria Fernandez, Brooke DePalma, and Inez Ferre. I really enjoyed this segment. Coming up, Yahoo Finance's Market Catalyst. We bring you the news behind the market moves for the trading day. Don't go anywhere.